late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So again, we're going to jump into the educational side of things, take a look at some other things we're going to look for in the charts. So today I want to talk about price action patterns and candlestick patterns. They are useful tools to kind of give us an idea of when we're coming into levels of support and how the market is reacting at those levels. So we've talked about support and resistance, we've talked about identifying trends and positioning ourselves, and now we're just going to get further into those signals that we get from the market telling us whether we're looking at a likely bullish or bearish outcome in the future here. So we're going to jump over to things right now. The first thing I'm going to talk about is candlesticks. So essentially, if you don't know, candlesticks are just kind of what is on each chart here. So every single one of these bars is a candlestick, and they all tell a slightly different story. So we're going to flip back here. Essentially, what we have is you either have a green candlestick, which is a bullish candle, or you have a red candlestick, which is a bearish, just meaning that the sellers were actually able to kind of outpower the buyers, and then alternatively, if we get a green candlestick, the buyers able to outpower the sellers there. So we see right here made up of the candle body, so that's the main portion right through here. We see we have our wicks, so we've got this upper wick here, and we've got this lower wick here, so we see these lines right there. Essentially what that means is price dropped to that point, but then ultimately, you know, coming back and then closing wherever it did end up closing here in terms of the bullish candle, or the bearish candle opening here and closing down here. But that's what I talk about. Lots of the times you'll see a lot of these candles when price moves really quickly and it gets bought up or sold really fast, then you'll see these large wicks occur. That's what I talk about when I say you don't want to get wicked out of your positions, is you don't want to be in a position that's so risky where if the market takes a little turn, you get that quick volatile drop or pump to the upside, and then it actually takes you out of your position before reversing in the way that you had originally expected, but now you're not in that trade, you've been stopped out. So there is ways to avoid that. We'll get into that kind of further going on, but basically just placing our stop losses below support levels. So we do understand now that what makes up the candle. So we've got the upper lower wicks, we've got our candle body representing each different aspect of the candle here. So highest price, closing price, opening price, and lowest price, and then the alternative here for those bearish candles. So there are some neutral candles. You know, the most common ones we're going to run into are these doji candles and these spinning top candles. So essentially a spinning top, either bullish or bearish, but ultimately more neutral than the other. We do see basically equal wicks to the up and down side with a small candle body in the middle. Doji's a very small candle body with a large wick to the up and down side, basically just showing that the market's very uncertain. You know, neither sellers or buyers are in control, and it's really kind of just a wait and see type game from that situation. So the ones I want to pay attention to most closely, and I think kind of carry the most weight, are these single candle patterns. So we see here in terms of bullish here, we see a hammer. So you can kind of see it resembles, you know, a little bit of a hammer here. So we've got the handle, and then we've got the head of the hammer right there. We see inverted hammer, so essentially the same thing as the as the hammer, but inverted with the head below and the wick up. We've got our dragonfly doji here, so that's that long tail to the bottom, and then that little green body right on the top of that wick. And then we see we've got our bullish spinning top, which is that equal wick to the up and down side with the little candle body here. Alternatively, on the bearish side, we've got hanging man. So the hanging man is kind of the reverse of the hammer, where we see price was able to go up, you know, not able to really follow through, and then just ultimately selling off, getting that wick down here below the body. We see a shooting star candle where actually price shoots up way past kind of any sort of resistance. We see this candle really extending up, but not able to close up there. You ultimately see it selling, breaking down, and then you end up with this large wick and small body here. So kind of like the inverted hammer, but we call that a shooting star. You've got the gravestone doji, so the alternative to the dragonfly doji, just inverted here. Very small body at the bottom of here with a large wick, showing that the sellers kind of lost control there. And then we see the bearish spinning top. So the same as our bullish spinning top, but on the inverse. These are all candles that we're going to look for in the charts. If you see we're coming into key levels of support and you start to see some of these candles printing, it can give you a better idea of what the market is thinking might happen. You know, if we come into that support and we're printing bearish candle patterns and we're not looking good on our momentum indicators, that's a good signal that we're likely to continue that downtrend. Alternatively, if we come into key levels of support, we start printing some bullish candlesticks and we start getting a little bit more momentum on our indicators. So our RSI, our MACD, our DMI, they're all reset, you know, more oversold than overbought, and able to support that trend reversal or that bottoming type move. So another thing I want to pay attention to here is confirmation. So essentially we're going to look for these candles in the charts and then see if we get confirmation from them. So what we have here is 3 inside up in terms of bullish confirmation. So you can see essentially right here the second candle after this large bearish candle is within the body of that bearish candle, and then we see that we print a second subsequent green candle that's kind of also just breaking out of there. So we got 3 outside up. So kind of the difference here is that this secondary candle is actually larger than this candle right through here. So ideally a bit more of a bullish setup, and then our third candle also following through. And then on the reverse side, we've got 3 inside down. You can see that first candle within that candle body, and then the second candle closing outside of that candle, and then 3 outside down, ultimately a lot bigger than the candle, and a subsequent candle closing further down. So we'll pay attention to the candlestick patterns, and we'll also pay attention to confirmation of those patterns as well. It's all going to give us a little bit more ideas of what's going on in the chart here. So we'll take a look, and I'm just going to get rid of that for you, but we'll want to zoom in here. I'm going to show you a few different examples. So essentially what we have here, we had our uptrend all the way through here, you know, bit of a sell off into here, and then we had that spinning top, so a bullish spinning top candle right here. That you can also see basically this bullish spinning top along with this candle here printed that inside up pattern. So we talked about 3 inside up, you know, green candle within the body of the red candle, and then another green candle printing after it. So that's what we see right through here, this green candle inside the body of the red candle, confirmed move up, and then we are able to go to new highs. We see right here, this is a bearish engulfing candle. So that's another one I want to talk to you guys a lot about. We see bullish engulfing here, and we see bearish engulfing here. So an engulfing candle, essentially this entirety of this candle is going to consume the previous candle, essentially just showing you that despite the previous price action, that the bulls have kind of taken control, really able to outbeat the bears through here. And then alternatively on the other side, you know, we see this bearish engulfing where this candle is substantially larger than the prior candle, signaling that trend change, that change in momentum. So we saw uptrend through here, massive bearish candle here, bearish engulfing candle. So that was a warning signal. And then we saw that we kind of went up a little bit further. We were able to continue up. And then we saw our bearish spinning top candle right here. So another warning signal. We had one warning signal flash here with that bearish engulfing candle, and then we had our bearish spinning top candle printing here. And then notice how within this bearish spinning top candle, this is that 3 outside down confirmation. So we see basically this candle, the body of this candle exceeding the body of the top right here, and then a follow through sell off candle to confirm that move. So that is something we could have seen, that could have gave us a few warning signals there. And then same thing down here, we go into our downtrend, and you start to see all these candles here. So different kind of spinning tops, doji candles. We had a bearish, just a bunch of uncertainty all through here. And then you kind of see we come down here, we print this nice green candle, and you can see this is that confirmation move to the upside. So we've got that kind of that outside up move there. Same thing that I showed you here, 3 outside up, and look what we've got that right there. So basically this candle taking up more than the prior selling candle, and then that follow through candle to the upside. And then again, when we get up here, we saw a bearish looking candle right through here, and then we were able to go a little bit higher, but again we had that 3 outside down confirmation, likely to continue that downtrend. Things were looking overheated. If we take a look at the momentum indicators at the time, it gives you a better idea. You can see right at this peak we were well oversold with that bearish cross, even through here. So basically, candlestick patterns aren't going to be absolute. You're not going to only look at candlesticks. You're going to use them along with the other tools that I've taught you. So we're looking at support and resistance. We're looking at our momentum indicators. We're looking at our candlestick patterns. And then we're also going to look at price action patterns. But I'll get into that in a little bit here. I just want to show you another couple examples over here. Kind of with this cycle top, or sorry, this current cycle top that we have printed right now. It's no guarantee that is the top, but basically what we saw here, we saw our uptrend, we had that bearish spinning top candle, and then we had that 3 inside down confirmation right through here. So we did ultimately keep bleeding before we came down, printed this large kind of a bit of a bullish spinning top there, and then ultimately we did also get a little bit more consolidation through here, but that 3 and then same doji, and then 3 inside up confirmation. So looking for those bearish or bullish candles initially as a signal, and then looking for the confirmation candle patterns afterwards. Same thing right here, big bearish engulfing candle, and then we saw kind of coming over here our 3 outside and down confirmation pattern. And so that was at that point, there was a lot of different warning signals in the market that could have warned you to kind of exit, de-risk, that kind of thing. So like I said, just the candlesticks aren't going to tell you this. You need to look at everything together, but we're going to break it down kind of piece by piece because it's a lot to learn. So if you learn each concept one by one, and then put it all together, practice lots, it's going to become second nature. So we'll flip over. We're going to take a look at chart patterns here. So I've got this chart pattern cheat sheet, really useful. It is in my technical analysis guide, which is included in the description. You can go to my Google Drive. All the information there, all the documents, educational resources are all free, always will be. So just check that out. You get access to this, different guides, write-ups, that kind of thing. Basically, what we see here, we've got bullish continuation patterns, we've got bearish continuation patterns, we've got bullish reversals and bearish reversals. So when price comes down to our levels of interest, we're looking for that support and resistance we talked about. We're looking for those signals that tell us what the trend is, and we're looking for the patterns in the price action. So if we're looking coming into that level of support and we're in a bearish continuation pattern and our indicators don't look good and our trend doesn't look good, the most likely path is continued downside. You can see basically outlined in all these pictures, we've got a descending triangle. So price coming in, we see this triangle here with a down sloping trend line and then a flat support line just bouncing in there, ultimately continuing to the downside. You've got a bearish wedge, which is kind of that up sloping price action here, but ultimately again bearish price action breaking to the downside, a bear flag, and you've also got bearish symmetrical triangles. On kind of the bullish side, you've got the same thing. It's just, you see how on the bullish side, you've got price coming up, consolidating and breaking out. And then on the bearish side, you've got price coming down, consolidating, and then continuing to break down. So it really is going to be indicative of the general trends. That's why I say you can't just look at one or the other. You need to use this in conjunction with all the other things that I do practice and preach. So just looking here, we've got bullish wedges, we've got bull flags, and we've got bullish symmetrical triangles, all different patterns we can look for at levels of support to signal continuation. In terms of bottoms or tops, we're looking at a double bottom type scenario. So this is like a W. The alternative is the double top, so an M top. Frequent patterns you will see in the charts. Same thing, we've got the triple bottom like the double bottom, but just 3 tags here of those lows, and a triple top. Then we've got our inverted head and shoulders, and we've got a head and shoulders move. So the inverted being the bullish, the bullish reversal move, and the head and shoulders being the bearish reversal move. And then falling versus rising wedges. So we're going to get into the charts, take a look at a bunch of different patterns essentially there. You're going to notice a lot of the same patterns. It does pay to kind of recognize each of these, but you don't have to memorize them all. Just come back to the cheat sheet. You know, you can even just Google chart pattern cheat sheet, and it's going to, like, there's a million different versions of this that'll come up. So we'll just flip over to the Bitcoin chart here. Essentially a few different patterns that we have recognized. So that M top that I talked about, basically right through here we had that one top coming up, and then the other top, although it was slightly higher, you know, I think it was close enough, and it resembles that M top here that we were expecting. So we see bullish reversal M top pattern, we see a bear flag pattern right here. So right through there on the low time frame, this kind of bearish flag pattern right there. If we move back a little bit, we can, sorry, I'll just zoom out, get a better idea. We see this huge bull flag pattern right in through here. So another example of that bullish flag. You see that flag pull, and then just that consolidation in that flag before ultimately breaking out. One thing I do want to show you here is in these bull flags, I'll show you, sorry, we'll get to the picture here. You essentially see how every time in the bullish continuation, we break out and then go to new highs. So what you're looking for, although this shows it going straight up, you know, rarely ever do we just break out and go straight to new targets. Lots of the times, like in the chart right here, you can see if we zoom in, basically coming here, we broke out of this downsloping trend line, and then we actually came back tested it as support. That was the entry you want to take on that swing trade, because we've got uptrend structure in terms of the daily chart. We've got that bullish inverse head and shoulders pattern printed here. We've got a bull flag pattern printed here. And we're holding above the 50-day and the 200-day. So those were all major signals that we're likely going to continue that to another new high, continue on a leg up. And that played out very well. So we're just following through now. We see here the bull flag. So lots of different bull and bear flags essentially that you can see. This was, there are certain times where the bull flag, you're not always going to break out. It will kind of, it looks like it wanted to break out, but ultimately breaking back down below the support, putting in those lows, and then continuing from there. Same thing over here. We had this bear flag that wanted to break out, wasn't able to sustainably break out, and just ultimately kept bleeding to lower targets. So looking here, the prior cycle, mid-cycle bottom, we saw one tag of the lows, a second tag of the lows, and a third tag of the lows, looking at that triple bottom confirmation for the reversal to the upside. And then after we topped out up here, you see bear flag into a bear flag, and just see continued bear flags essentially. So ultimately in that bear market, although a couple attempts to break that pattern, just breaking down further and further. And then you see here when the market actually reversed, we had bull flag into bull flag into bull flag, consolidation period, bull flag, a little consolidation, another bull flag. So if you're seeing lots of bear flags, you know, that probably tells you you're in that downtrend. You might be in a bear market. You really need to pay attention and really look for where that trend is going to reverse. We'll flip over to BABA here, take a look at another couple patterns. So this is the bearish rising wedge. Looking back here, our bearish rising wedge is a bearish reversal signal. So we did see previously a similar pattern in BABA, you know, this big flagpole coming up, and then we see our up sloping wedge ultimately breaking down, coming back, tagging these moving averages. So similar thing that we're seeing here. We've got our big breakout move and just consolidating in our up sloping rising wedge. What I want to show you here is in the SPY, we also had a similar pattern before breaking down. So we see our up sloping rising wedge ultimately breaking down. So that is that bearish signal. We also see that it was a triple top. So that one tag of the top, 2 and 3. We've got our rising wedge bearish signal. We've got a bear flag leg breakdown, and we're stuck underneath our key moving averages. So all signals that tell us that was, looking at a little more weakness in the market, and why we chose to de-risk as what kind of some of those warning signals. As I said, it's not the only thing you need to look at. You need to pay attention to the RSI, the MACD, the DMI, get a better idea of what's going on. You can kind of see, we had a lot of buying through here, and then a pretty big uptick in selling right there on the first peak, and then not a lot of follow through in terms of buying, and then all the sellers coming in, taking profits in through here. So there's lots of different signals and cues we can use on the charts to give us a better idea of what's going on. You need to use it all together. So look at the support and resistance we talked about, look at the trends, look at the patterns in the price action and the candlesticks, and then use it all together, and it'll give you a really good idea of what's going on at these key levels of interest. It'll tell you whether we're likely to get a bounce, how sustainable that bounce might be. Otherwise, it'll tell you that there's not enough strength there. We haven't consolidated or bled enough to satisfy kind of new entrants in the market, and not able to print that bottom structure that we really look for before we start entering positions. So if you like the content, if you learned something new, please share, subscribe. It all means the world to me, and I'll see you guys in the next one.